Good day, everyone. Well, we're seeing the market take a not too surprising a bounce here after the sharp sell-off. We've got the NASDAQ and S&P coming up to their 50 days. This is nothing new that the market hasn't served up before. We've also got a number of technical indicators that have had a pretty good reliability over the last couple of years in terms of calling markets near their bottoms. Talked about the put-call ratio and then also the Hulbert indication. And these are just measures of extreme. One is a measure of extreme pessimism. Well, they both are. The Hulbert is a bunch of market timers that time the NASDAQ, and collectively as a group, they tend to miss when they all say that the market's falling apart. Like clockwork, the market does find its floor, usually within a day or two of that massive exodus out of the markets or onto the short side of the market. And you get these short, sharp reactions to the upside, as you can see has happened, say, with the S&P over the last couple of years. When it does correct anywhere between 4 to 6%, it then has an about face and moves higher, typically on big price increases. The volume might be subpar. In fact, it usually is, which of course fools the majority once again, because when you see a bounce and the volume's low and the bounce is as fierce as it is, such as on the 10th of October when the S&P rose about 2.2%, the tendency is to want to go short the market into the bounce. The tendency is to think that this is a dead cat bounce. And I think every single time the S&P has corrected 4 to 6% over the last couple of years, I remember echoing among a lot of traders that this is it, this is the end, this is the QE can't hold up, it's not resuscitating the economy, things are going to go from we're going to have a repeat of 2008. And yet, lo and behold, as you can see on an S&P chart, it would fire up very quickly off the lows, leaving fund managers who had exited or lightened their positions behind, and then the S&P would go on to new highs. In the latest incarnation of what the S&P has done, it went to new highs in August, but not very convincingly, and then it went more or less sideways, and then now it's rolled over again, and now it's attempting a bounce. So it's possible that most likely, the lack of QE in the system, I think this is the last month of a $15 billion tranche before QE3 ends, and the market's sensing that, and I think that's going to cause some headwinds for the market here. So we're watching this bounce very closely. The market direction model is on a buy because, again, this bounce could materialize into something more substantial, but we're also not going to be surprised if we roll over and the market does not do what it has in the past. That is, with the S&P, it would be pretty quick to go to new highs, pretty aggressively. So if the S&P has problems at the 50-day for more than a couple days, if we really start to roll over again, and we're going to see that in the action of the leading stocks as well, then the market direction model will not be hesitant to exit its buy signal. And maybe even go to a sell, depending on how much selling pressure there is in this environment. If you look at some other indications, such as commodities, the Commodity Research Bureau Index, that's repeating its downtrend. It was in a downtrend for a couple of years, since 2011. Then it looked like it had bottomed, but now it's rolling over again, and it looks like it's on the verge of very close to making new lows. The oils are firmly in their downtrend. Gold and silver are plumbing new lows. So what does this mean? A lack of demand in commodities often is an indication that the major economies of the world are not exerting buying demand, because their economies are not completely sanguine and operating at 100%. So I think this is a bit of an ill omen for QE not really working as the Fed was hoping it would. I think their hands are tied because they've pledged low rates for the prolonged period, and they are dovish on balance, especially Yellen is noted for her dovish stance. So despite the economy, the unemployment rate going down to 5.9% today, they know that that number is tainted. It's not a real indication of an improving economy, and with the Fed knowing that, they have to keep interest rates at a very low level. With QE3 ending, I think the market could have some tough times ahead. We saw what happened in the market after QE1 and QE2 ended. So this time, again, we might not see that bounce up to new highs on the part of the major indices. We might actually see a more substantial correction take place, and then the Fed will probably get on the microphone and say that they're going to initiate some form of QE in whatever their timeline is, in a month from now, 2 months from now, to give the market some hope. But I don't really think they can just take their foot off the easy money pedal, because otherwise interest rates are going to inevitably rise. That's going to cause huge problems for struggling businesses in terms of getting lending. We see the dollar has surged. It's been in more or less a straight uptrend for the last several weeks. And all these indications you're seeing, I think, don't bode well for the markets. So, history has repeated fairly well since 2009. QE 1, 2, and 3 were very powerful forces. You can see the correlation in terms of how far the market ran during those periods, and you could also see what happened in the markets when you didn't have QE. When we had Operation Twist, that was a mild form of QE, a very mild form, and you could see that the market was struggling. It didn't have massive corrections, but we didn't have those strong, I shouldn't say strong, but we didn't have the uptrends that we had during QE 1, 2, and 3. So of course, we don't care what the Fed says or does, but we do care about the trends that can result as a result of these market manipulations. And of course, the leading stocks will tell us, act as a beacon and a lighthouse for us in terms of keeping ourselves exposed on the long or short side, depending on what the market serves up next. Gil?
Yeah, I think I can distill it all down into more concrete terms. I don't really spend any time trying to think through Fed scenarios or interest rate scenarios or dollar scenarios or any of that, really, when it comes to the practical side of making money in the market. I think yesterday you had a very what I was looking for intraday, and some of you follow me on Twitter will remember that around, I forget, it was maybe around midday, I tweeted that the market, it was time for a good old-fashioned reaction rally, sharp reaction rally bounce, and we got it. And what I was looking at is I'm always watching all the index charts intraday, because I want to see where they're coming in and where they might find support. So what you see here on the Russell's been getting pummeled. So all these small caps, they're just wildly oversold, if I may use that term. But you undercut your August and your May low, actually, which is here. I don't know. Let's see if I can make this. Here we go. You can see you actually undercut the May low too. So when I saw that, to me, that tells you the market's in a position to rally. The other thing is that a lot of stocks that I was shorting, such as Tesla, you see Tesla comes down right to the top of the handle, which is a logical place for it to bounce. Now you're to bounce from, and now you're rallying into the 50-day. So I went long the stock yesterday after being short, trying to short the rally up into the 10-day, and it didn't really slow down. So I went long the stock, and then I flipped out today, and I'm back to shorting it up here around the 50-day and the 20-day. So this is the bounce you're seeing. You had a pocket pivot here. The thing is, it's in a sort of a V-shaped position, so I think it's a little bit suspect. But usually if I'm seeing that action on an intraday basis and something I'm trying to short, I'll just flip out of there really quickly and just get out of there. So you saw that, but these things have been coming down for a while, and if you've been playing them on the downside, like LinkedIn down to the 65-day exponential, now you're bouncing back into the 20-day, 50-day confluence after breaking down through that. So you get a little undercut here, it rallies back up. So I think it's coming back into a shortable position. So that's how I'm looking at some of these stocks. What I did yesterday in the middle of the day is I flipped long Twitter because I could see that was going to have a pocket pivot, it looked like. I flipped long Mobileye because that was bouncing off the 10-day moving average and turn, and now these have gapped up Mobilize gapped. I think Twitter gapped up today too. And I sold these. What's another one? Palo Alto Networks had the pocket pivot, barely held the 10-day. That was kind of sketchy, but you've got a gap up today. So I don't know if this is a buyable gap up. Is it, Dr. K? Would you buy it?
Well, it's I wouldn't call that. It's very, in context of the chart, I wouldn't call that viable gap up, but certainly it did have a legitimate pocket pivot yesterday, which we set out on, and that was a very tight formation right into the moving average. So if you missed that, and it did have this little mini gap at the open, there's nothing wrong with buying late on that kind of pattern because it's still strong. Now it's a little bit extended. Now you don't want to be buying it up here.
And so what I do to sell into these moves today. They always go a little bit higher first, but I've found when you get 6, 7, 8% moves in one day, 10, 15% moves in 2 days, in this market you have to take them. So I just trade out of them. Now I'm looking at the short side of the market as these things rally, and that's all I'm focused on while I keep an eye on the position of the indexes. So the Russell 2000 undercut the low. So I'm looking at this yesterday, and I see this happening. As it starts to turn back up through the lows, I'm thinking, okay, this thing's going to bottom out short term and we're going to get into a bounce, especially when I get a lot of emails and tweets from people who want to start getting short. So, on Wednesday I was lecturing people about, if you suddenly want to get short now and you feel this the need of greed to start shorting everything on the planet because of what you're seeing now, you could be very late, and that could cause a great deal of pain. And in fact, if you started getting short on Wednesday, you would be feeling pain right now. So you can see at least on the Russell, but you look also at the let's go back to the NASDAQ. You didn't get it. You're sort of in midair, but see, if you see something like that, you got to be watching the other indexes as well. The New York Composite Index also undercut its August and May lows as well. So same situation here, and you bounce right up into the 200-day. So that's potentially resistance. Okay. Meanwhile, you've got the NASDAQ running up towards the 50-day, which could could go a little further, but you watch and see how it works this time. But it's same market, different week, I guess. Somebody says, was Tesla BGU yesterday along with the pocket pivot? No. I mean, does it really matter what it was, what kind of label you want to put on? I wouldn't call that a viable gap up. It's just a pocket pivot coming off a downtrend. So in my view, that's a kind of a weak pocket pivot. But if I'm shorting the stock, around the 247, 248, 249 level, and I'm seeing that volume signature and the stock's up, I'm going to get out of the way pretty quickly. I'm not going to mess around with that. Somebody's got a question for you, Dr. K. Is the put-call ratio something that has to reconcile itself sooner rather than later? I have no idea what that means. Or can it run at elevated levels for longer periods? How reliable historically in your...
Oh, I see what... Yeah. Put-call ratios don't usually stay at the elevated levels. That's why it's kind of unusual that it's been at this elevated level for 6 days. Usually it spikes once, like it did earlier this year. It spiked beyond about to 1.1 in April and I believe it was August. And it's a one-day event, but it's very good at calling market bottoms. It has a pretty good track record in prior markets, but it's a very, it's secondary or even a tertiary indicator at best, but it can be used in conjunction with other factors to give you a very clear picture on whether the market really is putting in a floor or not. We have some exceptional times like in 2008 and also in 2011 when you had the VIX going to record levels, and you had, I believe, the put-call stayed at elevated levels for unusual periods. And of course, we saw both of those markets eventually have huge bounces to the upside, but you don't want to just assume that because you got 1 or 2 days of an elevated put-call level that's the low. It just so happens in this kind of environment it tends to work very well, but we're also keeping in mind that because QE is ending this month, perhaps this elevated level of the put-call is just presaging further downside. We'll have to see in the days ahead. Yes, when the S&P and the NASDAQ get up closer to their 50-day, or if they can't even muster a bounce up to their 50-day, then that is a warning sign. And you just look at the S&P on the action prior to the current correction. If you look at the prior corrections on the S&P, it's pretty fast about getting to its 50-day, and then eventually, then from there, it will take a little bit more time, but it'll eventually break to new highs. So I'd like to see a repeat of that technical action in this current bounce, and if we don't get that, then that's a very big clue to either going to a cash or potentially a sell signal in the model.
I have to say, when I look at the chart of the equity put call ratio right here on the left, and you look at the index on the NASDAQ, and this business about the thing being a reliable indicator of a bottom, I think is these days in a QE market, it's not so reliable. If you look at this thing was flashing above 1 many days on the way down.
No, this is a different metric.
What are you looking at?
No, I think
The PC,
it's a different.
These are all, this is the index put call
basically, you want to look at if you want to use these, you want to look at the huge spikes and
right.
how they correlate.
But the put call ratio was over 1 for 5 straight days leading into Wednesday.
No, it's a different.
But still, it was
not,
over 1.0. That was the one that IBC reported.
1.0 is not definitive on these charts because it happens all the time. It happens routinely. These, if you want to use these, you really have to use more like 1.2, 1.3, something where it clearly is exaggerated.
Spiking very high. Is that what you're saying?
Yeah, in context of the chart, with the put call, whether you're using this one or the other or the equity one, there are the very rare moments where it gets way. I think the other one is like 1.5, 1.4. That's kind of the level that you use, and then you can see that does correspond fairly well with the market lows.
No, I don't know. It doesn't. The put call ratio was over 1 for 5 days straight, and to me, it's like, okay, what is it really telling you? I don't know if it tells you much anything.
Well, I wouldn't use one with this.
Near a bottom. If you can put it together with something else, I think it's more effective. So, for example,
but this thing is at 1. That chart is at 1 all the time, so it doesn't make any sense to say, well, this particular ratio is at 1 or above because it's doing it all the time.
Well, you can see spikes, and if you look at this, for example, I'm looking at somewhat elevated levels over the last few days where the index was continuing to come down. So that's all I'm saying. I just think there's a lot of talk about the put-call ratio, and these days it can be misleading. Don't you think so, Dr. King? I mean, there are some anomalies. Like we were talking about this the other day, where we saw it very high in September of 2008, and I don't know for sure, but to me, intuitively, maybe it's institutions are buying the hell out of puts because they're going to unload, all their positions or start to cut back and raise cash, and so they want to hedge. So I don't know, but that's just my theory. When you see it high above 1 for several days, or even spiking up to 1.2, 1.3. So, anyways.
Yeah. For instance, there's so many of these ratios out there. There's the daily put call that has an average of 1.83. That's the average, 1.83. So to say if it's up above 1, it's meaningless.
Right.
But you would have to. I've never looked at. I was just looking at on the internet. You'd have to figure out a way that this actually works or doesn't work.
Right.
I don't know what measurements you use. Yeah.
Well, I think you do. You use it in context with other indicators. So everything's contextual. So yesterday, if you're seeing a spike in the put call, and you see the NYSE Composite Index undercutting its August and May lows, and you see the Russell 2000 undercutting its August and May lows, then you can get a sense that, okay, we're ready for a little rally, and then we'll see how things pan out from here.
Well, these indicators are always secondary, tertiary in many markets, and it's kind of like the Holbert thing. That has accurately over the last couple of years, every time it spikes downward, showing a huge amount of pessimism on the part of NASDAQ traders.
Yeah.
It coincides extremely well with market bottoms, and that is Holbert says that has always been his favorite indicator for contrarian, calling contrarian plays in the market. And it is very clean. I have to say, it's I find it more reliable than a lot of the others, but I do agree you have to use all of these as secondary indicators because, again, just because we've had all these, the Holbert and the put call and whatnot, doesn't mean the market can't roll over in the coming days. And if you're assuming that we've really hit a major floor and that we're going to go off to the races again and you're sitting long the market, you could get your head handed to you.
Somebody asks, Dr. K, do you see a threat of deflation Why that matters, I don't know, but you can go ahead and answer the question.
Yeah, I don't see that being an issue. I think we've all seen prices rise, not deflate, on basic goods on both sides of the pond. And I think that that's going to be an issue for the Fed, because if you have rising prices, and we do, the CPI is not a real accurate measurement of that. But by having a CPI that looks tame, it gives the Fed more room or more of an excuse to continue to print money. And I think they're going to have to do that if they want to keep interest rates low. I don't see what other choice they've got.
Right.
If they actually showed the real CPI, we'd see signs of inflation over the last few years, and then the Fed would not be able to print money, and then of course we'd have a very substantial correction in the markets under those scenarios.
I'm just watching this market start to come in again. Let's see. Do you think Baba is rounding an IPO base here? I don't really know why anybody has to think about this. How do you know? I mean, you won't know until it's finished. I don't have a crystal ball, neither does Dr. K, so,
Don't try to second guess patterns.
Who knows? I mean, who knows? Let it set up. Let it do something. Maybe you get a 10-day. Where's a 10-day moving average? Shouldn't it be there pretty soon? I guess it should be there after today, I think.
Starting today, tomorrow.
Yeah,
starting tomorrow.
I think it takes another day, but then you watch for the 10-day to set up. Like like the Loco. We looked at this, and you had it ran up, set up, and gets tight along the 10-day. You could see that happening. I think we were talking about it in the chat room, and you buy it right there on the 10-day as it's drying up, and then boom, takes off. Now you got it pulling back, into the 20-day, 10-day confluence. It's trying to build a handle. So I don't know. We'll see what happens here. But
the psychology behind second guessing names shows that an investor who does that may be biased for that stock, and of course we want to eliminate all biases. So you need to look at these things
objectively,
with a cold, calculated eye.
Yeah, I mean, I think you're getting caught up in the greed of Baba. It's like, oh, everybody's got to buy the stock. It's the greatest thing since Facebook, a couple of years ago. I mean, even LinkedIn was a highly anticipated IPO, and that thing tanked after they came public, and it took a while to set up. So, there's plenty of time to buy these things, and you don't need to worry about it or think somehow that we are some gurus who have some knowledge of whether it's doing this or that. You only know until you can see the action objectively on the chart. And for that, it's going to at least need to show a 10-day moving average. And until then, you just watch that, see if and how it sets up. Let's see. Any other questions here? Some of the stocks we're looking at, Palo Alto Networks, for example, nice move today. It's jamming. Mobileye is jamming. It's coming in now, though. So you're at the highs. You could call this a flag breakout, I suppose. So it looks pretty decent. Twitter is another one. Somehow these look a little too obvious to me, but and I sell into them. I buy them in here and I sell them out here. And that's basically been my modus operandi throughout this market. So, and I don't care if they go higher without me. That's fine. I don't need to get squeezed every last penny out of them. Do that consistently, and you can be up nicely for the year as I am. So that's why I'm going to stick to that. Although they look good, and if you want to play a long-term position, I guess you can do it. GoPro, some people want to hold this. I think this is a sort of a climactic move. I don't know if it's a final climax top. Stock found support at the 10-day moving average. That looks decent on that pullback. So maybe it's just going to set up and build a second base, although I would consider this a flag. There was no pocket pivot. There was a 5-day, I think, pocket pivot here. Is that right? No, that's not true. So anyways, that's one of the hotties. Mobileye, as I pointed out, viable along the 10-day, I thought, yesterday. It pulled right in, held. Now it's gapping higher. Is that a viable gap up, Dr. K?
Yeah, I was looking at that, and I mean it's a close call, but it could be you could say that is
cool.
I mean, it looks like it's going to also, it's breaking the new highs. It's going to have good volume. It's been trading huge volume. Yeah, it's an IPO so it's going to be quite wild and volatile. The pattern's a bit sloppy going into this viable gap, but on the other hand, it is an IPO, so it's allowed to be a little bit more volatile than normal stocks.
Market's still holding up okay. So I just covered my Tesla. I put some out up here when it got up here last time, but not going to let that get out of control. In fact, might look at possibly, let's see. Let's look at just show you how I'll handle these intraday. You get a 620 sell here on Tesla, so you can get short it coming into here, although I thought a little bit higher, you could have gone after near the 50-day moving average. But you break down, now you've turned and you're bouncing off the 20-day, so you're around. So I'm not going to sit around there if it starts to flatten out on me. And it could continue higher. So any questions on specific stocks? You got Facebook just bouncing off of the 50-day moving average again. I don't know if that's necessarily buyable. In fact, I guess you could buy it at the line, but it's just kind of bouncing around right now. Fleet going to 500. Yes, it is. I don't know. There's nothing there. I think that's a joke. I'll take it as a joke. Let's see. For Dr. K, are there any stocks you went long this year that turned out to be mistakes? I ask because sometimes we can learn from mistakes. You're kidding.
I mean, that's what all these webinars are about. Is there's so many names that okay, well, you could say, for instance, Tesla. That had a huge run earlier. The sweet spot, and now in the last year, it looks like it's setting up. And the idea is that this is it's a first mover advantage publicly traded company. It's got the lead. So the hope, the expectation is that it'll continue its move higher, but it hasn't. And it did offer some clean buy points, but they didn't pan out. I wouldn't call them mistakes. I would say it's a mistake if someone is still sitting in this position. For instance, it had a pocket pivot on the 29th of August, but you better be very quick on the 15th of September when it sold off on big volume. It had a mini gap down at the open, and right then and there, when you see that volume pouring in, you don't want to wait. Within 5 minutes, you should be out of your position because look how fast it sells off. It was down 9% that day.
Yeah.
And then what's worse is if you compound your error by saying, okay, well, it got support at the 50-day. Well, look at the volume. Look at the context of the chart. That's a gap down on huge volume. It's the largest volume it's traded in months. And then, it has 3 days of diminishing volume to the upside. At the very least, you got to be selling into that bounce. Because look what it's doing. It's not surprising that it's now undercut its 50-day. So you got to keep in mind, I guess, the idea not to get wedded to a stock, not to fall in love with the thing, and a trade like buying it on August 29th could have still been minorly profitable if you had sold correctly and been fast, quick on the trigger to sell. That's why it's important to have stops in your stocks if you can't tend to them during the day. You want to have some sort of outside stop, so you're pushed out of your position if something like September 15th happens.
Somebody's asking about Gilead. There's really nothing here to get too excited about. You might consider this pocket pivot here, but it's just going sideways. I mean, there's nothing one way or the other that looks like you can tell anything one way or the other. So anyways, Alexion. Well, I mean, what do you want me to tell you? It's trying to break out. Volume is pretty reasonable. You're in this long sort of ladle with a handle type thing. You're trying to break out. That's about it. Gil, Apple's weak at the 50-day. Are you still short? Are you serious? I mean, are you even listening to what I talked about earlier when I told you what I came in long overnight, long Twitter, Mobileye, and some other names, and sell into the rise here. So I'm not short anything. So, and I think I already talked about that. So, but I think the stock looks kind of weak along here. But the only way this thing's going to blow apart is if the market comes in, and it'll be one of the components that drives the market lower. So, but it acts weak. You can see, I mean, I've talked about this before, and you see resistance along these highs, and it's pretty linear, you know, right along the top, and so you break down on heavy volume, you're kind of fluttering around. But I think where Apple goes from here is largely going to be largely dependent on the general market, and it will be a stock that, you know, does have a big influence. Okay, let's see. Mobileye coming in here a little bit. Maybe I want to buy some back. This will become another G Pro. So I'd say my big mistake was buying G Pro just right in here and selling it for a 7-point gain. How's that? And the thing just went up, you know, another 35 points or something like that. That was a mistake. ACT is trying to flash a pocket pivot at the 10-day line, so it's working on it. Maybe it gets there. Let's see. You know what? Tesla's looking like it feels like it wants to go higher. Like it'll go through the 50-day moving average here and fool everybody that wants to short it up here. That's what it looks like. Let's see. WWAV. These are the almond milk guys. I love almond milk. Stock is just holding along the 10-day, 20-day. So it had a nice move, so it's pulled back. That looks normal. Otherwise, not really too much there. You can see how you get this MACD stretch in here, and then the stock continues higher, and you finally start crossing around here. So it becomes a sell around 60 on an intraday basis. Now you pull back to the 20 period line, the blue line here, and you're holding tight. That's a lot of stocks that are strong movers. They'll do that, and then bounce off of that line. So if I sold something into a rise, I want to buy it back intraday. Sometimes I'll buy it back on that basis. So look, all you guys are buying it now. So that's good. I already bought it. So anyways, CMG is trying to come back up through the 20 days. So that looks okay. UNP here using the 20 as a stop. I don't know. Why are you asking me, like, do you need me to bless this, or do you need Dr. K to bless this so you can buy it here and use the 20-day as a stop? Question mark. If that, you know, is it going to go higher from here? I don't know. It's a sort of a V-shaped move, but you know, if you want to buy it and use a 20-day as a stop, that seems reasonable. But I don't know where it's going from here. I think I'd rather be long Mobileye here. I think it's just going to take off. It's going to 100. Let's see, any other trades? SCTY, Solar City, been a great short since we talked about it 2 weeks ago as it was breaking down right in here. I think if you're short this thing, it could rally all the way back to the 200-day if the market gets going. So keep that in mind. And but here, notice you can use a 10-day moving average as your trailing stop, which sort of coincides with this overhead supply. So, but the other thing here to think about is what it's doing here is it's come down to the top of this area, which is the very bottom of the prior cup. You see how there's this ugly cup with handle, and it failed here and has broken down. And it's come all the way right on top of this, and so it makes sense it'll bounce here. How far it bounces is anybody's guess, but it could just be you know, a quick move up to the 10-day, and then it fails again. So you could use the 10-day as a trailing stop if you're already short, and I would hope that you're already short the stock up here. If you're shorting the stock down here, you could win this week's Moron Award because you're way down there. And that's why I was talking about on Wednesday, talking about the idea that, you know, if the market's down big, it looks ugly, the action is everything but bullish, it's just bearish as hell, and you suddenly want to get really short. And I think, when you start getting those urges after you've been breaking down for several days on anything, you're stupid to try and short things. So, that's basically the story on Solar City if you're short it. So, I mean, but ANET, well, this thing had a nice move. The pocket pivot, it came all the way in. Now it's trying to regain the 10-day. The way this thing acts, comes out and then gets hammered back just like here, and they hammer it back to the 10-day. Maybe you can come back after it in here, and maybe that works. Let's see, Baidu. I noticed Baidu was tucking up into the 50-day. There's nothing there. Is that a short? It's a possibility. I would keep that in my back pocket if the market starts getting into trouble. But right now the market's charging higher, and my guess is also getting some feedback from shorting a couple of names. They started to come in. I put out a little LinkedIn as well, and they started to come in this morning, and then they push again, so you can kind of feel that. And Tesla has tried to come in twice, for example, and it's come out both times. So to me, it looks like it's setting up to go higher. CP. Well, this was a pocket pivot, I guess, yesterday. You could have bought it. Brocade, pulling back to the 10-day. You got a flag break out here, pulls back to the 10-day. If you like it, you like the story, then buy it. Why didn't you buy G-Pro back? Because I didn't feel like I wanted to buy it in an extended position. Taser. Setting up at the 50-day. I don't know. I don't think so. Maybe it's going to come flying off here. You got to look at some potentially some strong action. You could buy. I'm sorry, some strong action coming up off the 50-day moving average. But you have undercut these lows, so there's potential there. On a bounce, you're thinking in terms of the ugly duckling theory, which could work here. That's a possibility. What's the low on the day here? 1465. You're trading 1503. So not too bad. Let's see. UVXY model get put to bed? Dr. K, did the UVXY model get put? Yes, it did actually. So you want to talk about that? Go ahead and talk about that. I'll be right back.
Sure. Yeah. No, we're putting it in hibernation for now. Basically, we're going to be. Hold on one second. Let me actually just pull up the. I'm going to pull up the actual thing I'm going to send to everyone. See, our webmaster seems to have deleted it. I'll have to get it back from him. Anyway, yeah, no, the UVXY model right now in the QE environment, even with QE off, well, it's probably going to, my guess it's likely to do very well from here with QE3 ending. It did very well after QE1 ended. Some of you might remember, in fact, we had an FAQ where the model did extraordinarily well because UVXY is so volatile. It was up some 500% across about six signals, but that was back then, and the market more or less has had a lot of QE flooding the system, and these manipulations create problems for the UVXY model. So basically what I'm going to do is continue to track the signals. Like I said, I've made adjustments. Nevertheless, the adjustments are not working so well in this environment, and so basically either QE changes to some form where the UVXY can work, or QE starts to really diminish altogether, and then we're going to put the model back on. But I want to see a chain of overall performance figures on behalf of the model that I'm happy with, and then we're going to turn it on live again.
I'm back. Let's see. Amberella, what about it? Ran up, pulled back. It's in a V-shaped move, so don't know what to tell you about it, except that it's up there. Let's see, any other amazing questions. You can Netflix is another. This is a pocket pivot right here, and it looks like it's continuing up into the high. This sort of bear flag, but it could have put in a bottom. You don't know. So I wouldn't be shorting it here. I'd wait and see if this starts to break down. But you know, you broke down here. You undercut this low, and you turn back to the upside. So you kind of get into a position where you can rally, and that is totally logical. Let's see. You can see how the Mobilize coming up a little bit here off of the 20 period line that I was looking at earlier. I'd have to say, whether I'm long or short, I'm probably running paranoid the whole time, because this market has a tendency to pull the rug out on you at various times and can do it somewhat randomly and quickly. We saw that happen the other day, and I think that's kind of common for a QE market. You can see Twitter here. I'm watching this intraday. Coming back to the 20 period line. So this would be where you're also kind of getting a MACD stretch on the downside. So you might be at a position where it's pulling back for the day. Maybe it undercuts just a little bit here. Huh. Coming down a little more. But you can see it dropping in real time. It just dropped below the 20 period line. Now watch the 6 period line comes down, and to get a sell signal you need this to cross. And sometimes what will happen is the stock will dip below the 20 period, but the 6 period line will not drop below the 20 period, and sometimes the stock can be bought at that point. So you're seeing a little bit of support in the name here as it pulls back right around the 54 level. A little bit of buying in here, but it's not able to get back above the 20 period yet. It may need to come down a little more. But anyways, I'll keep an eye on this to see if I want to re-enter the trade at some point, having sold into the upside move earlier. Let's see. Somebody says thanks for the play-by-play on Twitter. But you know, this is a very tricky market, and it can fool you in so many ways, and it tries to. And my view is, if you catch something right and you get a sharp gain, you want to take it, or at least put some of it in the bank, and then kind of work it from there and see what happens. But you know, my general view is that you have to be very careful, because danger is always lurking either way, whether you're long or short. And so I kind of run paranoid, like I was saying, the whole way, all the time. And I think it's worked this year just based on the numbers that I've been able to put up so far. But it's a lot of work. So I don't know about buy and hold. Might work with stocks like GPro, but they don't work with very many other situations. Okay, any other brilliant questions? Let's see. Ann got it up here. I don't know. This thing's, what do you think? Yeah, I don't know. It's trying to come up around the right side. It's got overhead up here. It's running into a lot of overhead here. I don't know. It's kind of dicey. I see what you're trying to see here. But no, I wouldn't, you know, you call this a bottom fishing pocket pivot, I guess, but like, it's kind of erratic, so I'm not really too sure about this. Market coming in again. I don't know. Is that a motorcycle, Dr. K?
Yeah. Wow, that's interesting. You heard that. I could barely hear it from where I'm sitting.
Just watching this thing trade in real time right now. Mobilize moving up. Is everybody buying it here? Now let's see. Tesla starting to flop around here. Since this is a real-time webinar, let's see what. Not really getting the sell signal though. It can be a little bit volatile. I think you'll. I bet you what we see happen today is the market will be back and forth. If you want to short the market, you're gonna get you start salivating here and there, and then they'll push it into the close. That's the classic maneuver, right, Dr. K?
Exactly.
Any other questions? Someone says, in other words, they hit the leaders last. Oh, wait a minute. It's a longer question. Let's see. When you see GBX, TRN, SWK, SPA, NW take a big dip like they have, can that mark the end of the decline? Dr. K, you want to answer that one?
Say that again?
When you see, hold on. When you see GBX, these stocks all got pummeled on some news. There's in some an argument with the government right now.
I mean, there were two that had good pocket pivots, and then they went for a couple days, and then they staggered.
They blew apart.
Stagnated rather, and then they got hit real hard. So another good reason to have your stops in place, because that GBX one day it fell 10%. So what was the question?
When you see names like those, GBX, TRN, SWKS, and PANW take a big dip like they have, can that mark the end of the decline? In other words, they hit the leaders last. Well, that's the old saw, is that the strongest leading stocks, when they start to get hit, then that marks the, when the correction might be over. If they've been holding up, say, throughout a decline, and then suddenly they start to break, a lot of times that can tell you that's the end of the pullback. So yeah, I mean there is that correlation. The best stocks hold up, and then when they hit the leaders, they're the last ones to get hit, and that marks the end of the selling, at least for now. So I think right now you're in a position where the market can continue to move higher, and you're just waiting to see how this pans out. I got some of my longs back on these pullbacks intraday, like Mobileye. I just resumed a long in Tesla here. You just saw a pullback right in here on this. See, that's me supporting the stock right there. I just came in and bought 200,000 shares for my IRA. Yeah, all right. Let's see. We need more questions. Somebody else is asking, Dr. K, do you see a threat of deflation? No, we already answered that. Somebody says the dollar has been on a parabolic run, yet it continues higher. Do fund managers pile into the dollar as an asset class? No idea. I have no idea. How about you, Dr. K? Do you have any clue? And does it really matter?
Yeah, who knows what fund managers do? I mean, there's so many ways to manage funds. I mean, who knows?
Ken Sabe. I agree. All right, I'm going 400% long Tesla here. No, not that much. Only 100. How's that? Do you think MDVN has a resistance at 100? Long from yesterday, but maybe the top was at 104. I don't know. I mean, it looks to me like it wants to go higher, and it's hanging in there fine. So, but you bought long from yesterday, but maybe the top was at 1. No, you don't know. I mean, it's hanging along. What would you say, Dr. K? Hasn't really.
Yeah, I mean. What's that?
Go ahead. Hasn't violated the 10-day, I don't think. I mean,
no, it looks good. I mean, you also got some real strong fundamentals on its side, and the group rank is number 2. I mean, it's got a lot of tailwinds that could take it higher, and you also had, that pocket pivot is actually it's still in play. It had one just a couple days ago, so you could use that as kind of your guide. And it did have a it had a viable gap. It had a gap down 3 earnings reports ago, but then the last earning report it had a nice strong move out of its base there. So since then it's been keeping to its 10-day very well.
It has.
Yeah, I like it.
It's hanging in there okay. So Dr. K likes it, which means you can now sell your wife and kids and your home and every worldly possession you have and put all the money into this stock. I remember this did blow up one time. I mean, it looks okay. There's nothing wrong with it, but I don't see any, this might be considered, no, that's not a pocket pivot. This might be considered a pocket pivot, I guess. So on that basis, and if you bought it lower, then you're doing okay. Let's see here. What else? We're almost getting to the end of the hour. GMCR. The stock, since it had the Bible gap up, it's just gone sideways, and there's no buy points in here that I see. Is this a pocket pivot? Maybe this one would be, but there's no continuation from there. So I think, it's got its issues. So same old grinder kind of rally that you're getting when you find a bottom and you start to come up. Splunk is rocking today. I actually scalped some money on the short side on this thing, but it seems to have some thrust on the upside, so I wouldn't short it here. I'd keep an eye on it though. You keep wondering whether you got a left shoulder or a big head, some right shoulder. You don't know. You got resistance up here, so if the market got into some trouble, it might become a shortable name on the basis of this being a right shoulder, but you don't know yet. So you're kind of watching things today. You got a nice move in some longs this morning, which was a good way to start the day out, and some nice rocking moves in these stocks, and that's nice. And I'll take some profits and then kind of see what I want to do from here. But it's very touch and go. I mean, Dr. K, how do you handle this market? Were you long anything overnight?
No.
Okay, so you didn't go long anything.
Well, no. I mean, I still have a. I wasn't long any stocks overnight. No.
Okay, so and I had some positions. I've sold them into these big moves, and now I'm looking at where I want to buy them back. I bought back Mobileye. I bought back Tesla here, but nothing's really.
No, I'm sitting. Just to be clear, so people don't think I'm completely in cash. I have sizable positions still in SVXY. Well, that's core, but I have a sizable one in XIB that I held overnight.
What is sizable, if I may?
Basically 100%.
Nice. I like it.
Little over, I'd say, yeah.
That's a manly position. All right. Let's see. We talked about Splunk. Go-Go is a no-no. I don't like it. It's trying to come up. It had a little move from this gap up, here, but I don't know. Looks dicey to me. Let's see. Any other questions? Grub-a-dub-dub. This thing got hammered. There's I guess there was a share lockup expiration, IPO lockup expiration, whatever, on October 1st. Is that right? And nobody's selling apparently. So this thing's way down there. Maybe it's got, use the ugly duckling theory here and figure maybe it's Bible. I think you do the same thing with Taser, but it doesn't really seem to be getting any juice off the 50-day line. It's underneath here, but Facebook, I already talked about Facebook. Bounce off the 50-day, kind of a weak rally. We'll see what happens here. CRM coming back to life. In what way? Well, it's trying to, but it's kind of in an ugly position here. See, there's the ugly duckling theory, looking really grim, and then boom, they get a gap up this morning. A lot of stuff did that. Is PANW not an all-in situation? I don't know. Could be. Maybe it is. Let's all go all in and push it up another $2. But let me get some shares first. It could be. Tesla could be an all-in situation. Maybe it's just going to pull a Netflix or something and just continue back up to the highs and screw up everybody who got short on this. You saw the fractal head and shoulders, and that worked actually. But when you come down on top of the prior base, you're in a position for a bounce, and if it carries beyond the 50-day, at least I think it's ought to play as a short sale target. But it feels to me like it wants to go higher today. So, and I've been here before. It's like been there, done that, where a name will rally up like this, and I made some money, shorting it here, and you had the breakdown, and shorting it again here, and you had the nice breakdown. Short off the peak here when it breaks on the gap down, and picking up profits in a position all the way down. And now you're here, you got this bounce. A lot of times I'll come back in and try to short them here, but I get stopped out every time. So at least in this market, and that's what happens. These initial bounces carry a little bit further than you think, and maybe it carries all the way up to this level up here, which would be around 265 somewhere. So we'll see. It's all still fluid right now. The market's doing what it's doing, and I think a lot of it makes sense based on the undercuts by the New York Composite Index and the Russell 2000 through their August and May lows. And I think that sets up a logical rally. And all in a QE market, these things can carry a lot further than you think. So to me, it's just you're watching the stocks, you're trying to remain fluid, taking some profits into sharp upside moves, and taking it from there. So somebody says, thanks so much for everything you both do and share. Much appreciated. You're welcome. Somebody lost audio. That's your own internet, I think. Somebody's asking about major support in gold, GLD. Well, there's talk of a triple bottom, but you know what? I don't see anything. I'm not going to buy this just because somebody says it's a triple bottom. I'm out. I'm not in gold, other than physical position I have from way back when, 14 years ago. Bought around 300. Anyways, Abago. Is that right? Oh no, that's the ADG. I forgot the O there. I don't know. That ran up. This is pretty typical. Is this stock? There's another one. I'm trying to remember that does similar things. Yeah, software, Skyworks Solutions rather. So I'm not really into them. Some more questions on stocks. MNK. What is that? MNK. Get that right. Malincrot. Had a pocket pivot at the 10-day. I think it's a slower kind of name, so I don't think it cut our eye yesterday. Or smaller. Yeah, trades 3 million shares. That's not too bad. Let's see. Tesla and Mobileye are up on must tweet that driver-aided car coming. Okay, cool. I think Mobileye might have a lot of potential longer term, so maybe it turns into the next G Pro, and it's going to be at 80 in another month. So. Jazz, somebody's asking about. Too sloppy for me. I don't really see anything in here that I like. So, I don't know. Do you like it, Dr. K? Does it catch your fancy? Tickle your fancy?
Not particularly. I mean, it seems to regularly undercut its 50-day, and I'd like to see a proper pocket pivot before I'm going to pay any attention to this one.
I'm with you there. Let's see. LinkedIn stuck at the 50-day again. Yeah, I mean, that's where it is. We talked about this already. So it's just in this bear flag. So I don't see it as anything viable. If I was going to buy something off the lows, it would have been yesterday, and it would have been in pocket pivots like Netflix, like Twitter, like Tesla, like Palo Alto Networks. And, I mean, these were buy signals yesterday, so you had to be on them back then. And I think we put them out. We put out our alerts in a timely fashion, I believe. I already discussed ANET. So what do we have? Latecomers here? I mean, what is there to discuss? If you can't look at this chart and figure out what's going on, and you need us to figure it out, I got to think you're kind of you must be at the way beginner level. And you feel that in the midst of what is really kind of an incoherent movement in this, I don't know what you call it, a base that's formed since early September, that we can make sense of this in terms of whether you buy it here or not. I don't know. It would have to set up. It's like what you saw here when they tried to break out to new highs back in early August and it pulled back. See how it's set up along the 10-day and then popped out of there? Same thing, when you move to new highs, you pulled in. It's set up along the 20-day line, the 10-day together, more or less, and then popped out of there. Now they bring it all the way back in. I don't know. Do you trust this name? It seems pretty squirrely. But there's nothing here I can figure out. If you bought it yesterday near the 50-day, which is probably coincides with the 10-week, yeah, there's a see it on the weekly chart coincides with the 10-week. Then you're okay. But at this point, you're just hanging with it. If you bought it on the pullback, so which I'm assuming is why you're asking about it, and not that you should be buying it now. Anyways, last question. ALNY, LNLM, how do you pronounce that? You know how to pronounce that, Dr. K? This one's just moving sideways, so, nothing really all that special here that I can get thrilled about. I mean, it's just got a little flag here moving sideways.
Yeah, it's a nice formation, but we just need to see some sort of evidence that it's going to go higher.
Yeah. I'm just watching Tesla here. Coming up, you see, it held on the pullback here. See how the price came below the 20 period, but the line didn't. So a lot of times you undercut a prior low in here along the 20 period, and you can buy a stock on that basis, and I'll do that. So that's, I use this in different ways, and it's really just kind of a device. There's nothing magic about it, even though people want to believe there's something magical about the chart. But the way I use it is the way I use it, and it's contextual and a whole bunch of other things. You can go in the chat room and talk to some of the people there, and they'll give you some insight on how they use similar devices. So anyways, let's see. Yeah, LinkedIn looks to me like it wants to go higher. So somebody's talking about it getting stuck at the 50-day. And, of course, this is a short sale target, but you're not getting any sell signal here. There's nothing telling you, that you can be shorting it. All you see intraday is a flat base here that it's forming, and it looks like it wants to turn and go higher. So I tested a short on this on the MACD stretch in here. You see it here? And then it started to confirm a little bit here with this cross, but this never confirmed, and it started to rally back against me, and I just covered it. Not going to mess around. Let's see. I'm watching Twitter. It looks like it wants to go higher here now. Anyways, that's all I've got. You got anything else, Dr. K? So basically, you're rallying from a logical position based on what the New York Composite and the Russell did when they undercut their early August and May lows yesterday. And now you're rallying. We put out some pocket pivot buy alerts in PANW and Twitter and, I don't know, Tesla as well, Dr. K, did we?
No, nothing on Tesla, no.
Okay. But, if you're following on Twitter, yes. I was talking about Tesla. And, if you bought PANW or Twitter, you're doing well today. So, that's basically where you are. And you see how this pans out. So, but so far, I don't see anything wanting to give it up. And I sold my longs and tried some shorts out here. And I'm not getting any feeling, at least any feedback from the market, that that's the way to be. I'm sensing that there are bids in there, and they're strong bids. So I'm not going to stand in the way of these things on the short side. And I'll go back to the long side. So anyways, last couple of questions. ARUN is a short. No, I'm not. I wouldn't really mess it. I see what you're seeing. There's like a fractal head and shoulders. You're rallying back up there. I mean, I think there are other things to be short, but only if the market starts to roll over. And you don't know. For all you know, we're going to start a new rally phase and break out to new highs. And I would have thought this morning with a very strong jobs report and the unemployment number dropping to 5.9, I was expecting the market to roll over because it confirms the need to end QE or that the Fed can. But Dr. K, you argue that they really can't. Is that true? Is that right?
Yeah, the Fed. I don't think the Fed really has much room to to let rates go higher at this juncture because they know that these economic statistics are a bit tainted, a bit flawed.
Yeah, that's yeah. So why did the market react the way it did? Would you have expected, in the face of a strong jobs number and a declining unemployment number, would you have expected the market to sell off, or do you think it's kind of a non-event today?
Well, I think we're having a technical reactionary bounce to the upside. QE is still in effect this month, but well, the question is really what is the Fed going to do to keep interest rates low? And the market could very well, repeat the cycle of going to new highs once again, just on the basis that it believes that the Fed is going to keep to its word and keep rates low till at least the middle of next year, if not a whole lot longer. So we'll have to, it's really a question of price volume action on what the market serves up in the days and weeks ahead as to if we're forming a major top here, or if it's way too premature to say that a major top is forming.
Someone asks, but isn't the dollar indicating higher interest rates?
Yeah, it is, and it's troublesome because you have this screaming dollar, this surging dollar, and it's made possible an indication that interest rates are actually going to be on the way higher, and that inflation is there, even though it's not seen at the CPI level. And if inflation gets out of hand, then the Fed is really stuck because they can't continue their easy money policy. And I mean, the market could, in subtle ways, be starting to telegraph these issues in the form of making a major top. These major tops, as we know, can take weeks to months to form. So it really, but we just need to be aware that these are possibilities.
Final word, someone says there are a lot of short setups. Well, there are stocks, I mean, you could say Tesla is still an active short setup. If it finds resistance here at the 50-day, which actually is at 256, so it could rally that far from here. It could go up another couple of bucks, and feels like it wants to, but we'll see what happens. Yeah, this would be considered a rally and a short setup, but you don't know that until it happens, because I can tell you I've seen many times where you have a stock in what looks like a clear short sale setup, and the right shoulder of a beautiful textbook head and shoulders topping formation, and boom, the thing just continues higher. So I think I'm trying to remember, there's one that's in the book. Let me see if I can. I think it might be this one, Creighton Performance. Let me see if I can show you this. Yeah. I don't know what happened here. There we go. Yeah, here's look at this head and shoulders. So you see this setting up as a left shoulder, a big head, and it's textbook. You get the big volume breakdown, and the stock's forming the right shoulder here. You might think that the volume's picking up here, and you're stalling, and it's going to roll over, but no, it turns into a bizarre cup with handle breakout and continues higher. Then you get a head and shoulders up here, and it tops there. So you don't. The only thing you know for sure when you're shorting is that you don't know anything. All you're doing is reacting to things in real time, and trying to necessarily paint things as black and white can get you into a lot of trouble. You have to dance with the stocks, end of story. And if you can't do that, and you want to try, say, and work short sale targets with smaller positions and hoping for longer term moves, that's one way to do it and limit your risk. But I like to play heavy, and so I just wait and watch for the opportune time, knowing that when I think something's set up, it may not. And a lot of times in a QE market, you'll get this initial 2-day rally, and it looks like it's light volume, and stocks are rallying into their short sale points, like Tesla. But all you know for sure is that this stock has bounced back. It's pulled back to the top of its prior base. So for all you know, it could turn around and just go to new highs. You have no idea. And assuming that a short sale setup is actionable on the basis of it simply looking like a short sale setup is not the right way to go. So be careful with all that, okay? And yeah, there are a lot of stocks that look like they're in weak patterns and could potentially roll over. But, I would call your attention to things like Netflix, rallying up in here, looked like it was, here's, again, a left shoulder, a big head, and for all you could have thought, oh, this is a right shoulder, I'm not going to buy it, I'm going to short it here. You would have been run over. So in fact, I remember trying to short it right there, and it did run me over in just lightly, just a little bit. I only have a couple of tire tread marks on my head. Anyways, but that's it, you guys. It's 9:12. We've been going for well over an hour and 10 minutes, and that's all we have. So I think we pretty much laid it out for you, and that's that. So we'll catch you guys next time. Thanks for showing up. And I think we got a good video recording, so this should be posted in a couple hours, okay? All right, everyone, have a good day. Take care.
So long.